own property in Israel or you're about to purchase a home, then chances are you've got a mortgage and your monthly payments have skyrocketed in the past year. Well, you can breathe a slight sigh of relief for now. The Bank of Israel has decided to hold interest rates this month at 4.75% for the first time in more than a year, in light of the first signs inflation may be moderating. Now, the temporary pause comes after the central bank raised interest rates 10 times consecutively, from 0.1% in April 2022 to 4.75% at the end of May. Now, fueling the cost of mortgages, many families have struggled to pay off their monthly loan payments. The central bank warned, however, that it would not hesitate to raise borrowing costs in the next months if the political turmoil surrounding the judicial overhaul persists. The bank's governor, Amir Yaron, is calling on lawmakers to find a broad agreement over the legislative changes to ensure economic stability. And joining me now is Professor Asher Blass, former chief economist at the Bank of Israel and lecturer at Ashkelon College. Thank you very much for joining me today.
Thank you.
So explain to us the bank's reasoning behind this decision.
Well, there are indications that inflation is moderating. It's not yet cause for celebration. And at the same time, there is a fair amount of uncertainty as to the legislative changes. And that in itself creates a need for interest rate increases because Israel might be seen as less safe for foreign investors. So while there is a lull, it's not at all clear that interest rates will not rise in the future. And the Bank of Israel was actually quite explicit about that.
So walk us through how Israel's political crisis has affected the state's economy.
Well, the issue is that regardless of one's opinions about the legislative changes, it is quite clear that the changes and the process itself and the signals as to future changes and the extent to which some of these changes are not just based upon differences of opinion as to the role of judiciary, but might be connected to corruption. Those perceptions by foreign investors create a situation in which Israel is viewed as less of a safe haven for their money. And as a result, if Israel is viewed as not a safe haven, the interest rates in Israel will have to be that much higher than the interest rates of safe havens and more stable environments abroad, be they the United States or the developed economies in Europe.
Right. But I want to ask you, though, is raising the interest rate the right answer, though? Because we're seeing thousands of families being literally pushed to the brink, unable to afford their mortgage payments, and essentially squeezing out the middle class. And yet the Bank of Israel has continued to raise these interest rates.
Well, that pain which you're speaking about, and it is truly pain, is what is required to get inflation down. There is excess demand in the Israeli economy. And as a result, prices are increasing. And a tried and known formula for getting inflation down is to reduce demand. And because, as you say, households will have less disposable income after paying their mortgages, that will decrease the demand for goods and services and will reduce inflation over time. And it has occurred in the United States, Israel, and many other countries. It's not an unusual process that is being embarked upon here in Israel.
So looking ahead, is inflation expected to decline in the next 6 months?
Most of the indications suggest that inflation will decline. Measures that are based upon investor expectations from the capital markets suggest that inflation in the year going forward will be lower than the inflation rate during the past year. That being said, when the Bank of Israel's rate is 4.75%, even if inflation is moderated, let's say to 3%, 3.25%, we're talking about an interest rate which in real terms is not especially high. 1.5% real interest is not a high rate. And even those people who are paying more in terms of interest on their mortgages because of this inflation, will see the value of their apartments increase in value over time. So it's not entirely clear that even for such folks over the long run, they will be worse off.
I've heard many people say, well, listen, Israel isn't the only country battling an economic crisis post-pandemic. It's a global issue, and we're not so bad off after all. Is that true in your opinion?
By some measures, Israel is in decent shape in terms of deficits. On the other hand, the events of the past few months, the political uncertainty is rather unique to Israel at this point. So I would say it's a mixed bag.